Welcome to SharkCapTable.pro. Keep a bigger bite of equity. We're going to talk about valuations in this section. This actually is the print valuations, and ultimately what this section does is it makes a 4 or 5 page executive summary with absolutely key points for you to tell your story succinctly. We are against writing big business plans at first. Get your numbers, get some of these questions answered, go out and fish for investors and see if they have any interest. If they do, you can always come back and make your business plan. But first, find an investor. Look, anyone can claim their pre-money valuation is $5 million or more. That's easy. It takes finesse to defend against investors discounting it to $1 million or even less. We've provided quantitative and qualitative methodologies for your defense. You've seen this section before. It's over here. SharkCapTable.pro right here. A little more explanation. So here we are, section 15. This is where you establish your quantitative pre-money valuation for years 2 and 3 for your investors. This page assumes that you can use it for either a year 2 raise to your friends, or after you've completed this, you could do a year 3 for round 1. The reason we've given you 2 columns is that many times nothing actually happens. You don't have any revenues, you don't have any profits. It's just a company that's at development stage working hard on something. And you're going to most likely need pre-money valuation to establish how much of the company you're going to give away at that point. If you have revenues, now you have something more tangible to value. So one of the key questions is how much cash has been invested. So here we have the founder round. It happened to be $335,000. We would also put that over here as well. Additional founder investment that may come later. And the rounds, the friend round investment is $470,000. That came from this column here into the next year. Now, let's scroll up a little bit. So let's discuss this revenues. The first thing is that you put in a multiple of your year 1 beta test revenues. Remember that this is the first year being placed in the second year because we're trying to raise money from results of the first for the second. Off the side here, there are 2 spin buttons. One is blue. That basically turns on or off this line here. And the other one is brown, just like on the other page, SharkCapTable.pro. It scrolls through whether you're going to be using trailing multiple of revenue, and it shows whether it's the low revenue scenario, the mid revenue scenario, or the high revenue scenario. This actually brings in what the multiple is being used, and this is the value of whatever it is, the revenue or the EBITDA. So in this case, you'll see that we can scroll around very quickly. We're not going to put a negative number in there, so we'll probably do a forward multiple of revenue, usually $3.2 million, maybe a little high, but so what. Okay, so now we're coming down here, a little intellectual property. We got patent applications. I don't know if they're worth $200,000, but they could be. A provisional patent is essentially zero. You only have some value when you actually apply for a patent, but it could be booted out, so it could have zero value, but it depends on how good the search is. If you actually have a real live patent issued, it might be worth $1 million. It depends upon how many years remain in its lifetime. You could have designs and prototypes, you could have working versions of a piece of software, you could have a website. Anything in blue, including the names of the line items, you can change. And through time, these components, for example, into the next year, could be worth more. Let's scroll up and let's look at management expertise. Now, management expertise, again, is an intangible. These are not salaries. These are what you think the founder is worth to the company. Some people have inflated views and they say, oh, I'm worth $28 million. Well, if you were Bill Gates or Mark Zuckerberg or one of these hotshot guys, Elon Musk, you could be worth $1 billion to a company, but you're not yet, not until you prove it, so keep it reasonable. Obviously, there's just a couple here, but as the company gets bigger, you may actually have a few more people involved for this round one valuation. Market size and ability to capture share. How big is the market? Well, everybody wants you to go after multi-billion-dollar markets. You may only have a smaller market. If you got a small market and you're the first mover, maybe you could have some value. If you're a first mover in a big market, that could make a massive difference. Like Uber. Who had ever heard of ride sharing before Uber came along? Nobody. How much should you put in there? Oh, $500,000, $1 million, $250,000, up for grabs. Other considerations, well, you know, you could have a brother-in-law that's the chief buying person in a big company, and you're going to get a lot of business from the brother-in-law. You may have some alma mater relationships. You may have some business relationships. It could be a political relationship. Anyway, you have to ascertain what you think the value is. In this case, we've added up about $1.76 million. This case over here is about $6.7 million, probably by virtue of having a lot of these guys and this big one here, the forward multiple of revenue. So, make a long story short, if this is an exercise, try to do it. Just don't wave your hand and say, I'm worth $5 million without having some components. You see, if you have components, you can tell the investor, I'm worth $6.7 million, and here is what my assumptions are. You know, I've got some revenues. We put some money up. We've already got some earnings or revenue, and we're working on that. And we got some terrific people, and here's who we have, and here's why we think they're worth this amount of money. I'm sorry, here's our intangible assets. This is what we think these intangibles are worth. We've added some really good people from the original team. So we're continuing to increase the value of this company. Thank you.